Welcome back. The market holding on very strongly, 175 points. In the green, Sun TV is up 6% and it's up and about. Indigo is the other stock which is buzzing. By the way, the breadth of the market is 3:1. About 1,300 stocks are higher, 420 odd stocks are lower. And I mean, in terms of stocks which are going up on large volumes, it's a long list today, and we'll get to some of that in just a bit. CARE Ratings is another name which has been buzzing. I mean, in 2 days flat, CARE has gone from 300 to 400 plus. It's reported a very strong performance sequentially. Ajay Mahajan is Managing Director and CEO of the company. Ajay, thanks very much. Great to see you, in your new role. I mean, you've been there 6 months now, Ajay. And I was just looking at the price performance. I don't know if you're tracking it, but CARE is now basically back to where, back above where the stock was when you took over, essentially, roughly. The numbers for the quarter have been pretty good. Income at 84 crores compared to, 80 crores same period last year. But quarter on quarter, it's a 79% growth. Top down, can you tell us what happened in the quarter?
Yeah, Prashant, thank you very much for having me. It's indeed a pleasure to be here and representing CARE and talking about the numbers today with you. Prashant, when the quarter one results were announced, we said very clearly that this is a very strange year. It's a very difficult year. And we also said that as a result of the pandemic, a lot of corporate clients were not able to finalize their audited financial reports for the first quarter in time. And as a result, our volume of activity that we could actually process it dipped. And the way we account for our revenues is that a large part of the revenue accrues on the company if we are able to accomplish the rating exercise through that quarter in the investment grade basket of our clients. So essentially Q1 was understated to the extent that a lot of surveillances could not be done. Apart from that, I would also not just give it full credit to Q1. We've also been able to pick up steam. Our business development and our ratings teams continue to work hard, and we've had a reasonably good and steady second quarter. You've already summarized the numbers. Let me just take a quick look for the benefit of your viewers. Our total revenues in Q2 are up 6% on the corresponding Q2 of last year. Our expenses are 6% down. And as a result, the PBT expanded by 14% this quarter to 49.72 crores, up over 43.55 crores last corresponding quarter of last year. And with higher tax incidence also, we've been able to register a 3% PAT growth this quarter. So the numbers have been reasonable. We are okay, but no case for complacency. There's a lot of hard work to do. As you know, CARE is a turnaround story, and we have we modestly we have to keep our head low and keep working and keep working hard.
Ajay, so in a way you would say that Q2 also got the benefit of some of the volumes and revenues from Q1. So should we look at it in terms of the first half performance? And if I do that, the revenues have pretty much been flat in the first half of the year compared to, the same time last year. Should that be the run rate, say 130, 131 crore even for the second half of the year? What is the outlook on volumes as well as revenues?
Yeah, so Rima, thank you for that question. It's very hard for us to actually, give you a projection of any kind, not because of a standard disclaimer, but indeed it's a function of how many companies, do come in to take leverage at a time like this. As you know, the economy is growing, or rather degrowing. We are likely to see a -8, -9% full year. And on top of that, we are also in a state where a large part of the corporate sector is, and I'm not talking of the large companies, I'm talking of the medium companies, are actually in the process of deleveraging as a result of a reduced economic activity. So the outlook honestly remains somewhat sober. I wouldn't say anything more than that for the next 2 quarters. But definitely there are green shoots in the economy. We have seen the IIP that dipped all the way down 57% in April to -8% now. So we are hoping things get better across multiple sectors. But the recovery is quite fragmented, as you know very well. So there are multiple cohorts of sectors that you can draw up. And some sectors have shown steady improvement. but there are some sectors that are still languishing. So let's see how this whole thing plays out over the next 2 quarters, but we remain cautiously optimistic.
Ajay, 2 questions. Which line of your business are you most optimistic about? And if you can give us some sense of growth for this year and FY22 full year.
So Prashant, I'll be candid with you. Care is a slightly different case. Like I mentioned, we are in a transformative journey. We did go through our own set of problems. Let's just put it at that in the last 2 or 3 years. The regulatory inspection compliances in this business have actually grown by leaps and bounds. Care has been very internally focused in the last couple of years with the board, with the management, focusing a lot on processes and making sure that, we button up everything internally. We bring back, in full steam our entire focus on quality of ratings, on analytical rigor in the company, and, entire focus is on improving quality of our ratings. So that's what we are entirely focused on. And transformative journeys take a little bit of time to actually convey their complete story. So I can only comment on the long term, Prashant, unfortunately. Hard to comment for the next 2 quarters of the full year. And let me just say it this way, that, considering that we had seen a decline in our top line and PAT earnings for the last 2 years, we will do well if we can somehow achieve our last year's numbers this year. That's the best guidance, at least in terms of management strategy, that I can give you. But in the medium long term, obviously the objective will be to claw back all the market share that we lost in the last 2 or 3 years.
Ajay, thank you very much for joining in. That's Care ratings for you, notwithstanding or taking into account this 38% rally that we've seen in the last 2 trading sessions on Care. The stock is still down 35% on a year-to-date basis. Well, let's move on. Mitesh Thakkar is also